There we go. All right. So the Alec again, before we just went live here, I apologize for you letting us, be our guinea pig here on a concept that we have. But really, man, we were very appreciative of you doing this. So for the folks that get to watch this afterwards, because I can't fathom, we have a ton of people that we're sitting around waiting for us to push.
They're ready. They're riveted.
Oh, just so much. My son, maybe like Rowan, who's off school this week. I'm going to do around the horn, but first I'm going to run through what we're doing here. The mortgage industry in totality is a resilient business. It's gone through a ton of changes over the years, a lot of different shapes and sizes and forms. And we're probably at the crossroad of some of the biggest changes that we're going to ever really see in the mortgage business. Some of it is internal. There used to be this kind of single lane approach to our industry. Either I'm a lender or I'm a servicer. Either I'm a broker or I'm correspondent.
Yeah.
Those lines are getting blurred by the day with some of the biggest acquisitions. The other things that we have happening are regulatory and financial needs. The capital requirements to stay in business and be able to have your lines open, things like that continue to go up. And so we're seeing this mass amount of consolidation, this mass amount of multi-vertical approach like we've never seen before. But then at the same time, we've got outside pressures with technology and AI and this and that, and everyone kind of like what's going to happen in our future. And so what we're going to try to do with Peter and Steve is we're going to take down topic by topic of the changes in the industry, of what's happening, and how originators can view this as an opportunity, not a risk. And again, taking advantage of Alec, who is one of the sharpest minds in our business, best known leaders in the business, is letting us have our very first conversation with him. So again, Alec, man, thank you. I'm doing the exact wrong thing in these things in a long preamble. But give a little bit of your background, Alec, because we're going to talk about brand and marketing for the originator in the future ahead. Can you give a little bit of your background and why we're picking on you, for this?
Yeah, I think many people know that I came up in this industry very old school, street originator style, like broker previews, open houses, nights and weekends, purchase business, realtors, lunch and learns, all the stuff that is like the original, like in my opinion, like the local professional playbook. And then did very well and did reached high levels and did a bunch of loans and built good teams. And then kind of got involved, Arjun, what's up, dude? Then got involved in, marketing, because sales and marketing for us in the street are very interconnected. And as the world went digital, I realized that I was personally very ill-equipped in the digital marketing space. I was very good at the relational marketing space, very ill-equipped in the digital. And yet that was one of the things that our salespeople really needed to become leaders in and learn in. And so I got really involved in digital marketing. It led on a unique path into the chief marketing opportunity, chief marketing officer at Loan Depot. And then I'm back in production with my people where I kind of belong. And I kind of spent 3 years doing that as an ask. But I've been on a lot of different sides of the coins in the mortgage space. And that's where I think my insight and some of this conversation will be helpful to people who are looking at how to manage the changes that are coming at us full steam.
Yeah. And there's not very many people that have gone from producer to branch manager, regional manager, divisional manager. Oh, and then by the way, I'm going to become a CMO. And do that extraordinarily well. So, that was fun. And then I'm going to do introduction, and hopefully I just shut up for a while. We've also got Peter Tenfjord and Steve Rennie. These are two partners of mine that I've worked with now. I mean, Peter, I think you and I are on year 10 or 12. Rennie, this is our second tour of duty. We're at double-digit years together as well. They're business development directors here. They run a lot of the strategy in terms of growth that we have here at Loan Depot. They are like me, in the trenches, speaking with leaders and producers around the country all the time. And so we're going to try to take down these conversations together and see if we can add some value to it. And also they're extremely patient because, good God, they haven't said a word and I'm just talking a lot. So, Alec, now we've got everyone's kind of rolling everything. Talk a little bit about, if you can, because this is an interesting crossroad now that AI is coming out. Video is, what is the current status from your seat for an originator trying to build a brand and where, kind of the future lies in that. Because yeah, you grew up in a traditional way. I'm going to go to open houses. I'm going to get, ground and pound, use drop rate sheets off at offices, things like that. Obviously it's changed. Can you talk a little bit about what the future state of this is?
Yeah, there's a massive trap happening right now, which is very interesting, which is kind of the shiny object trap. But let me start with kind of the foundation of how I see things, because if that's helpful for people, because it's gonna be the kind of lens that I describe, what needs to happen through. And so the foundation I have, the paradigm belief I have, is that in the mortgage lending industry, people do business with people they like, know, and trust. And we also do business with brands as humans. Like Amazon's a great example. It's a no name. We don't know where we're buying from. We don't care, but Amazon, we trust them. There's this dichotomy in the space of, is this a commoditized product? Is this a product that requires human wisdom and consultative help? And that's been a war inside the mortgage lending ecosystem for generations now. For as long as I've been in the industry, as long as my dad's been in the industry, people have tried to commoditize it and then realized, oh crap, I still need humans. By the way, they try to commoditize the real estate side too. So let's not get anything twisted. Like everyone's trying to digitize this physical experience. So I go from the foundation of people do business with people they like, know, and trust. And that there is still value in the consultative wisdom of a professional versus just this pure commoditization, push a button and get a mortgage. I don't think that's smart. I think people did that before and they got bad mortgages. I think bad mortgages have hurt people. There's a whole, history here to kind of unpack. But with the emergence of AI, it reminds me very similarly of the emergence of automated underwriting. Now, they're different things, but they're similar experiences, where automated underwriting was coming in when Countrywide invented clues, and everyone was like, holy crap, it's going to replace human underwriters.
Yep.
Everyone remembers this that's been in the business longer than a couple of years. Of course, it didn't replace human underwriters. It added some efficiencies. It added some pickups. It brought the decision-making faster in the cycle. It did a bunch of different things, but it didn't replace humans. And it arguably made humans more effective. So when you look at AI coming through, and let's look at it from an operations perspective, and then we'll talk about it from a sales perspective, it's going to do everything that everyone thinks it's going to do. It's going to make underwriting faster. It's going to make decisioning quicker. It's going to analyze documents in real time. It's going to do mathematics faster. It's going to be an efficiency pickup. There is no doubt. Everyone sees this. Now, when, how fast, how quickly, that's all going to be in the pudding, and we'll figure that out in a second. But here's trap number one. I remember this so clearly as an originator back in the days, and here's my analogy. I remember loan officers who didn't want to prospect realtors because it sucks and it's hard and it hurts and you have to go get rejected, and you put yourself in these positions of vulnerability where you cold call or you walk in and you introduce yourself and all that stuff's there. And so what they tried to do is try to stunt double their prospecting by hiring a business development person to go out and meet the realtors for them. And I know there are people that had success in this model, but I'm going to call out the failures and the interesting thing here, because the relationship's happening not with the originator, it's happening with the biz dev person. And so they're trying to get away from the awkwardness of building business themselves and stunt doubling it. And I see it happening right now with AI in sales, and it's terrifying. Terrifying in the sense that people are setting themselves up for absolute failure. They're forgetting the premise of people do business with people they like, know, and trust. And instead, they're putting an AI avatar up in front of humans to now do the things that they don't want to do. I don't want to put myself out and build a brand. It's too uncomfortable. I don't like the video. I don't like the technology. I'm not going to learn it. And so instead, I'm going to have AI do it for me. And immediately, the trap number one here is you're stunt doubling the relationship aspect of the business. You're pulling yourself out of it, replacing it with an AI avatar. Now, let's just pretend AI gets to the point where you can't actually distinguish, because now we can. I know it's not you.
Well,
and we'll get to the place
Peter
when
actually posted a video of him actually wrestling a bear last week. I thought that was Peter doing.
Yeah.
I thought Peter was an avatar right now. It looks so real.
It'll be there.
That was real.
But even then, all we're doing is saying that the human relationship aspect of our business is invalid. It can be replaced by an avatar. And we've just immediately walked away from the foundation that I still believe is true, that people do business with based on human connection. And so that's trap number one, is we're seeing the efficiencies come in. We're getting excited, but then we're like, oh, wait, it can do things I don't want to do. And we're stepping back from the true aspect of our business, the human connection aspect. And it's going to be a destroyer of businesses for certain people.
Mm-hmm.
See, Peter, Steve, this is where I'm shutting up and hoping.
So with that said, how do you see leveraging that capability and growing your brand, growing your client, enhancing your client referral partner connections, and evolving into this sort of AI world effectively.
Yeah, so it's going to be about leveraging AI for the non-human connection aspects of our business that are very, very time-consuming and crushing. And I'll give you 2 examples. So let's just say Steve is client A of mine, and Peter, you're client B, and both actually like you're both loan officers. Peter's a loan officer, Steve's a loan officer, and you both worked with me in the past. And Peter, every quarter, you have in your calendar to call me and check in as a past client, and you text me interesting things you think are value, every quarter as well. And then you've intentionally found me on social media and you follow me. And so as I post my kid scoring a soccer goal, you're commenting every now and then. You're in my life. You're posting stuff on social, and I'm watching you live your life out loud as you're kind of cruising around. You send me an email that's not a crappy drip email, but something that's thoughtful and that you wrote and that has some thought, and maybe there's even a video from you and a message about thanking me for being a client and all these stuff. That relationship with you is real and human. And Steve, I did a loan with, and he's never called me. He emails me a crappy drip campaign from a company. He doesn't follow me on social. He doesn't connect with me. He doesn't call me. And here's the punchline that people get. We're now rolling out AI assistant tools at Loan Depot, where an AI avatar for Peter can call on behalf of you and say, "Hey, Alec, would you like to talk to Peter?" Blah, blah, blah. Steve's going to have it. Peter's going to have it. Both of you are going to have your AI avatar call me when rates come down and I can refinance and try to schedule me an appointment with you, Peter, or with Steve. Peter, you have a real relationship with me. You've made effort with me. You've put calls in. You've put texts in. And so when your AI avatar, Lindsay, calls me and says, "Hey, I'm Lindsay. I work on behalf of Peter's team, and I'm an AI tool for Peter, and he'd love a chance to call you and get time to refinance, and here's the deal." I'm like, "Hell yeah, transfer me to Peter." God, I love it. Steve's AI calls me, and I'm like, "Steve who?" I'm actually offended that Steve's AI has called me, because I'm like, he wouldn't even call me himself. What a clown. So the difference becomes so obvious when you look at this example of human connection versus not human connection. Of course, so Peter can now call 500 people at once with an AI assistant and get huge results because he put in the work to have real human connection. Steve's going to have AI call 500 people and get a bunch of middle fingers flying back at him and no relationships because he doesn't put in the time. Does that make sense? Do you see it? Can you see that? Now, how much more efficient is Peter? Leveraging his database with AI. Night and day. He's going to crush it. He's going to do things that I would be calling manually. I couldn't get to everybody. Remember, Shane, you'll remember this. Barrett Ketchian locked like 60 loans in a 3-day window when rates came down. And this is like 2 years ago. I'm just remembering because I called him and I said, "How did you lock 60 loans?" He's like, "I would have locked 80. I just didn't have time."
Yeah.
Because he had prepped his people. He had pre-qualified his refi pipeline. People were ready. And as soon as the window was there, it was 3 days. And he was just manually pounding the phones and getting as many as he could. Guys like him will do 200 locks instead of 60. Because he'll leverage AI to be more effective, but it's because he has the real human connection.
There was another, Alec, I watched part of a keynote that you gave. There was another component of this, and it was the same formula of the input that you put in dictates the output, dictates the results. And it was more on, in the future, if we don't think that people are going to be Googling or chatting, I guess, ChatGPTing, AIing, "Hey, find me the best loan originator in Orange County, California," we're crazy. They're going to go to that as a resource.
Yeah.
And do you remember that part of the talk? Can I shut up and you take over? Yeah. And because it was an input output thing like that was like, oh my God, he's right.
Well, I think that loan officers are going to get crushed in this cycle, Shane, because they lack connection and relevancy with their community and their database and their partners. Yeah. And relevancy comes through connection and intentionality and consistency. It's like back to the Peter Steve, LO story. If Peter's calling me and staying connected and being intentional, then we have a real human connection. And so I will, as a consumer, ask ChatGPT or whatever AI tool I'm using, what are rates today? In fact, because I'm going to be using it, this is the thing that makes me insane. Everyone's going to be using AI because it's going to be in everything. It's going to be in your phones, in your LOSs, in your cars, everywhere. When you pick up the phone and call someplace, you're going to be talking to AI. It's going to be everywhere. And so humans are going to be very, very used to using AI on a daily basis for just things, just inquiries, questions, book something for me. How long does it take to get to this destination? Everything. So they're going to clearly ask, what are rates doing? What could I get a better mortgage somewhere? Of course they will, by the truckload. And that trend is just going to go up. Like, it's just going to get bigger and bigger and bigger. So back to the relevancy comment, if I'm asking my AI assistant, what are rates today? Number one is, am I going to be asking Peter? Am I going to be asking my loan officer? That's only going to be by the level of connection I have with them. Or B, what's AI going to say? What is AI going to say in who, and this is the joke I made on the stage. In the old world, right, I built belly-to-belly relationships because consumers asked realtors, hey, who should I use for lending? Right. So that was very clear for me. I needed to be the top of the list. And then Google appeared, and we all had this war for supremacy for the top of the list for Google, right? People are asking Google, who do I use? And so SEO and all these things became a thing that companies have been fighting over and standing up and existing. Now it's going to start asking AI. And when we ask AI, who should I use for lending? Who can get me the best rate? What is it going to say? And I made the joke that it's not going to call a local realtor and say, who's the best loan officer in Orange County? It's going to turn its power towards the internet, and it's going to go look things up to make a decision. And so loan officers who are digital ghosts and have no brand strategy and no personal digital strategy at all are just giving up that space to their competition. They're going to lose massively because AI can't find them. It's not going to refer them.
And
wake up.
And so as producers, you still are going, and what I'm hearing, yeah, and it was funny, Anthony made a great comment. He goes, AI plus HI, right? The human intelligence is from a skill, and in this future of AI and everything else, it's not that the robots are going to take us out. But we have to still have relevancy and relationship with the folks that we do business with, right? If I'm going to use an AI assistant and I want it to actually be effective, I better damn well have a relationship. Like in recruiting now, we've seen this. Like, you see companies that will send out blind emails and notes that says, hey, I want to give you a gajillion dollars to join my organization.
Same.
And I'll admit, I hate it. But out of FOMO, I'm like, screw it. I'm going to test it. I'm going to see how this works. And so we did a test where we sent out blind emails. Hey, we'll give you this. You know how many people cashed my check offer? Because they're strangers. I had no relationship. I was just some putz, offering them cash. But getting aggressive with relationships, you get results. No different than with your clients, your realtors, and everything else. I can use an AI assistant for outreach as long as I'm doing the old school traditional. They're going to see me in the market. I'm going to be engaged in the community. I'm going to be at the events. They're going to know me, or as you were saying with Peter, calling him on occasion, chatting. Yeah. So still, from a skill perspective, what we've always done matters. The other thing, though, and Alec, I know you've been beating this drum, is there's still too much of a population out there of originators that have not embraced being digitally relevant.
Yeah.
Mm-hmm. They're not posting content. They're not blogging. They're not involved. And to your point, this free resource that people are going to believe of who are the top 10 originators in Orange County, or who's the best originator in Orange County, the AI doesn't know. It's just going to go curate data that people put up on for free. And so it's going to convince you that it knows when it doesn't have a clue, because if you're not posting, you're not in the score sheet. You don't have a chance to be on the suggested thing. So it more so than ever, you can't just be old school belly to belly relationship, phone call, in person. You need to be digitally relevant. You need to be socially active.
So, right? What are the 2 or 3 things that originator could do today to get there, right? In an AI scrape, if you will, for a top originator in Orange County. If you're starting from scratch, or if you just, need a reset digitally, what could that be, Alec, from your seat?
Well, it starts with getting your head straight. I hate to say this, but if you're not a believer, you're not going to do anything. So you got to get your head straight, and you got to understand. You have to really get down, to the hill and do I believe in this or not? Are consumers spending more time on the internet or not? Are they making decisions and going to be making more decisions based on AI input or not? And you got to understand, you got to get your head right first, because then you're asking people to change behavior. Well, you can't change the behavior without belief.
Yeah.
So they got to really spend the time going, do I believe this or not? Because if I do, then I got to change my behavior. And so the best indication that I can help with anybody from the how do I get started is, where are humans spending their time? Go ask the questions, go look at the resources, go identify the places people are spending their time. Are they on social media? Yes. Are they on YouTube? Yes. Go ask AI to find the top 10 originators in your county, and then ask it, how did you come up with this? Give me all the sources that you pulled from to curate this list. And it will just tell you, here's where I found this data. It's not your loan officer website. It's places on the internet. I mean, Tom Ferry did this whole thing for realtors and at the Sales Mastery Conference, where he basically said, get long form blog contents are back. Long form blog contents are back because that's what AI is going to read. And he had this whole thing of like, get AI to write you your own long form blog content using the right keywords so that when somebody searches for homes in Newport Beach, blah, blah, blah. But again, it's the same game. AI will tell you where it's looking. It will tell you where to go build connection. But at the same time, use your freaking brain. Are your past clients on Instagram? Then go be on freaking Instagram with them. Like, people make this so complicated. Where are they?
It's crazy what you just said. You're writing, if long form blogs are back, you're writing for AI instead of your consumer.
Yeah, wild.
You're putting content out for AI to do the reading, right? And
that's the new SEO.
That's nuts.
But here's the irony of this. Like, everyone's now going to look for the hack. What's the hack that I can do that can do this for me? Tom was saying, like, get AI to write your AI blog post so that AI can read it. And I was like, hold on. Like, forget, hacks are great. Little micro strategies are great. What's the baseline purpose? If it's real human connection, then go get connected to humans.
Yeah.
Yes, do AI. I'm in. You should have an AI strategy. But if you're going to not call your clients because you're going to be having AI write long form blog content for you, you're an idiot. Like, and this is where people get really like, and I'm not trying to trigger anybody, but you have to understand this is an and world now. You have to do both, or you're diminishing your level of connection and relevancy. So you have to have an in-person, pick up the phone, one-to-one, I care about you, I'm texting you strategy. If you're all one-to-many, then you have no real human connection. But you have to have one-to-many because you still have to be the billboard that people see every day. They still have to make a connection with you somehow, whether it's just a scroll, micro impression on the social feeds, whatever, or an email that fires over that has, some cool stuff in there that you like. You got to make both happen, which is going to separate the winners from the losers. But here's the thing, and Shane, you've said this before, and I'll never forget it. The winners are going to get more efficient. And when they get more efficient, they're going to go win more. Yeah. They're not going to be like, oh, cool. They're hungry already. They're capped by 70% of their time being in file management and having to hire an army of humans to manage paper. They're trapped in the business of our busyness because of how crazy the lending industry is. But when the efficiency comes in and they have more time, they're going to come for your lunch.
The sales composition at an organization level is going to be fascinating for market share because of that. Meaning, you've got some organizations out there that are just very sleepy, and that's okay. The originators are just like, look, I'm doing my 3 or 4 deals a month, and I'm good, and I can spend time with my kids, and blah blah blah. You can give those people efficiency until they're blue in the face, but they're not going to do anything more than the 3 to 4 units. And then the organizations that have this culture of we're going to dominate, we're going to win, you give those folks 40, 50% more time back to their week. It's game over. I mean, they're going to come for everybody's lunch.
This is the critical part of this next phase that originators have to wake up to as well. You can't do it alone. You can't do it alone. You are not a technology genius. You're not writing the next level code for AI using lovable.com that's going to change the internet. Like, you have to be with a scaled platform with strong tech partners, strong mortgage IQ leaders who are going to help and build alongside you the things you need to get that efficiency. You can't do it Frankensteining 700 pieces of technology together and you can't do it. So this is going to be a time when scaled solutions start winning, because it's going to allow hungry, talented human connectors to do what they do best, and the rest will get out of the way.
Can you talk about, from a marketing brand perspective, what are some of the things that scale technology organizations can be providing originators? And feel free to, look, this is just kind of a conversation, but use loanDepot in this, and things that we're building. You mentioned, for example, our AI assistant, and we're already beta testing it and seeing results from it. That will be able to nurture and farm databases and strengthen relationships. What are the types of things should organizations like a loanDepot and any other company be building in marketing brand to support this?
Well, so I use this example because I'm just a dumb sales guy, but it tracks. And so I think it helps. It's helpful. When I hired my first assistant, I had Act database and Excel and bullshit. And but I would tell my assistant, like, hey, Leslie, go through my database and pull every file that's got a rate above 6.5%.
Yeah.
And bring those to me at my desk, after our status meeting, because I need to call those people. And then it turned into, over time, hey, Leslie, go pull all those people that are in this range, but you call them and tell them that I want to talk to them and schedule them for me. And then it became, hey, Leslie, go get that data, but you call them and then you talk to them. You see if they want to do the deal. And because her effectiveness kept increasing, her competency kept going up. And so that allowed me to scale. Because now I could go focus on other origination activities to drive my business, because I knew she could go call these people and start to move the files forward. We are on drugs if we don't think AI solutions are going to be coming through, not just to get us the right data, but to start taking actionable steps to build efficiency around that data. And that's the stuff that you can't do alone. That's where like a loanDepot is going to shine, because we got guys like Dom and Anthony at the helm who see it and understand it. But this is the world of a CRM wrapped with your data with a correct AI solution is going to be unbelievable. Not only can it identify opportunities, which is great, but it can start actioning those opportunities with your custom personalized touch.
Yep.
And then it can start queuing them up for you, or just talking to them for you, or just pulling them in for originating them for. All these things are going to be part of the future. And this is where a scaled platform with high mortgage IQ people can connect the AI and the HI, the human part. And that's when you win.
And scaled integration with the point of sale, because you can have originators out there that can build an AI tool set, script write for me. Okay, it can go do that. Or, I'm going to dump this data and give me an output. You can do that. But you use the word Frankenstein. They got a tool for this, a tool for that, a tool for this. And by the way, I'm going to need to go grab the data. I'm going to need to shove you're basically doing your old school. I mean, Peter will still has, wakes up in a cold sweat. Our first database here was Act that I bought at Staples in like 2006 or something like that.
A physical copy.
100%. The box was a phenomenal day. But everything was manual, right? And you cannot do all of that and then still get that 40 to 50% advantage. I mean, if you try to do it on your own, it's really not much different than what the mortgage industry has been in for the last 10 to 15 years of technology development, meaning, hey, we're going to give you this really cool piece of efficiency that's not going to make it any more efficient because it's not really integrated with anything that we do. And it's really just going to be another step, and it's just going to have more cost unless the organization can build it all in one ecosystem that's fully integrated. If I got to manually go do this, we're going to have problems. That makes sense.
By the way, I'll share something else and this is a rabbit hole we shouldn't go down, but I'm just going to say it. I know there are loan officers out there right now taking their customers' private documents, their tax returns and everything, and uploading it to ChatGPT to do Fannie Mae calculations. I'm telling you right now, that all you're doing is exposing your customers' private information and feeding it to ChatGPT forever. Are you out of your freaking mind?
Yeah.
But they're like, oh no, it's a great. I built this private AI solution. I'm like, you just fed customers' tax returns to ChatGPT. I'm sure they asked you to do that, you idiot. But that's what loan officers are going to do because they're trying to solve problems and they're scrappy, but they can't do it without a company that's going to be able to understand it, integrate it. They're plug it into. Good luck plugging it into Compass.
Yeah, and to your point, like AI is not. It doesn't have to be open source for the whole world. You have an AI that is inside your walls, that is protected, that is, and Alec, again, we're going future state. Dang well, there are smaller companies that are doing that style of AI development.
Oh, it's insane.
Helping their team, creating their efficiency. You're going to see in the news at some point an organization going down because they have put public data, information or non-public information out into the netherworld that everyone has access to. It's 100% happy.
Yep.
100% happy. That's funny. Did we miss anything? Rennie, and honestly, next time, if you could talk less, I'd appreciate it. Did we miss anything? Oh, he's our ALS guy. I appreciate it.
Yeah. No, you guys, I didn't have anything to jump in with. You guys were on a roll. So
let me wrap up with this comment that I've been thinking about heavily, because, I do new hire every month and welcome our new hires in. And we talk about their brand, loanDepot's brand, tech, and all these things, and value proposition. And this is where, I'm just going to get on the soapbox and say it. There are going to be companies that win and lose in this cycle. We all know this empirically, and we kind of look around and go, I hope it's mine. There is no doubt in my mind that loanDepot dominates this next cycle in significant ways, because most of our competitors don't have all the pieces of the puzzle. They just don't. They don't have consumer direct sophistication. They don't have technology sophistication. They're just pure vendor animals. They don't have an in-market solution, and they don't believe in certain things that we believe. Like, they're going to lose because of strategic failures in their model. They just are going to lose. They don't have servicing. Like, all these these aren't going to be small cuts in a death of 1,000 cuts. These are going to be major wounds they can't recover from, because they can't compete in a multifaceted AI driven world where your model can't have holes in the boat. And so, like, I'll pick on the extremes, right? The pure digital companies that have no localized presence. You're screwed. They're trying to continue to believe that this is not a know you, like you, trust you business, that humans don't matter, that you can just win purely on this agnostic brand. And they've always lost, and they're going to lose again, because humans still want to do business with humans. Now, how they find those humans, how they get connected, how they stay connected, that's the war. But then you've got the in-market companies that have no digital strategy, all vendor solutions, no mortgage IQ or tech IQ in their departments, and no digital consumer strategy, direct to consumer strategy, and no servicing. You're screwed. You can't win. You can't play both sides. They're not going to be able to protect their database. They're selling all their servicing out to their competitors who are going to eat their freaking lunch. So, like, this to me, it has never been more clear that we are positioned to dominate like never before. And it's just get out of the freaking way or get on the boat.
Yeah.
You and I have met with a few owners over the last month. And I think what you said that resonates most with me is, there's phenomenal companies out there with great cultures and leaders that are driving, but they're using, single channel revenue to pay for everything, and stuff's not getting cheaper. It's getting more expensive. All the technology, all the new service agreements with increases in the, annual contracts for people. But what I remember when we were sitting with one owner, he was just saying that exact thing. He's like, loanDepot's multi-channel, sharing that expense, having like a servicing, revenue channel, and being able to retain that servicing, the JV piece in front of builder, retail, and direct to consumer. It's just like, it's multiple businesses in one, funding like this, platform in a different way than a retail only company can right now.
Well, it's a parallel to what Alec was talking about, Steve, I think, with regards to the traditional originator. Like, an originator can do business by simply talking to realtors in person and going to live events. You can do a business that way. You absolutely can. But what you're doing is you're making a conscious decision by doing that to say, I'm going to try to prop up my family's income, feeding my kids, putting them through college, by completely ignoring the fact that people are going to find lenders through still old school Google or AI. You're just choosing to try and build a revenue stream with not 100% of the market. And to Rennie, to your point, if you're playing in these verticals, all the verticals, you're playing in 100% of the market to then be able to create a revenue stream that allows you to reinvest into the innovation that's going to be required. To try and to do anything in this market without touching 100% of the market, that is dangerous. And at the same time, you're going to lose a lot. And Alec, a keyword you mentioned is the servicing side. There's a reason why servicing is being bought by the bigger players right now. I mean, direct access to clients and connection and relationship. I mean, goodness gracious.
And the predictive nature of their competency is just going to get better. They're going to be able to strike when people are actually in transaction or like looking to buy. I mean, this is not going to be the old game of like, well, they're going to call me because I kept them on my drip campaign. You're screwed.
Yep. Well, Alec, thank you, man. I appreciate you being our guinea pig on this.
Thank you, Alec.
Because we're not exactly live streamers, so thank you for coming down into the gutter with us at a low level thing. But fun conversation. Actually, a lot of tactical things for originators to learn. So again, man, thank you. I appreciate it.
Thanks, Alec. Appreciate it, man.
Later, guys. Have a good
See you guys.
holiday. Bye.
You too.